Discover the hidden risks in today's market. We'll delve into surprising signals pointing towards potential downturns, expert insights on upcoming interest rate cuts, and tips for building wealth by following market trends. Like and subscribe to stay informed.
Today we have 3 insightful videos to summarize. Let's get into it.
First, we'll uncover hidden weaknesses in the stock market with Mike from Mott Capital Management. Next, we'll dive into possible interest rate cuts with Jeff Snyder from Eurodollar University. But finally, we'll learn how to follow market trends and build wealth with insights from the technical traders. Welcome to Mott Capital's Market Chronicles YouTube channel. Today, we unravel the subtle yet significant cracks forming beneath the strong facade of the stock market. Our guest is Mike, the eagle-eyed founder of Mott Capital Management, who's got some compelling insights to share.
Absolutely. Mike delves into the hidden divergences plaguing the market, which might just tip the scales. Get ready for a mind-boggling market analysis.
Let's jump right in. What's the main thesis Mike is presenting in this video?
The core thesis is that the S&P 500's upward trend masks significant weaknesses and divergences. Only a handful of large-cap stocks are making the market look healthier than it actually is. Yikes!
All right, let's dig deeper. What's happening with market narrowness?
Mike points out that just a few big names are propping up the market. The equal-weighted S&P 500 has been stagnant since early March, so the overall market strength is pretty shallow.
And how does the advanced decline line factor into this?
It's been flat as my Nan's pancakes since March, signifying that there aren't many stocks driving this rally. Talk about skating on thin ice.
Interesting. Now tell me about the implied correlation index.
The index has nosedived to an all-time low, implying a volatility dispersion trade is at play. So while major stocks get volatile due to earnings anticipation, the overall index volatility is weirdly low. Hello, hedge fund games.
Fascinating. How are different sectors performing?
Well, it's not a pretty sight. Housing, industrials, materials, consumer staples, utilities, biotech, and transports are all showing weakness. The tech and communication sectors are doing all right, thanks to our large-cap friends. The rest is struggling like a cat on a hot tin roof.
Got it. What about sentiment indicators like Wingstop and Chipotle?
Oh, those are fascinating. Wingstop and Chipotle have both shown declines, and they might be harbingers for the broader market. When folks cut back on chicken wings and burritos, you know something's up.
All right, crystal ball time. What predictions does Mike have?
First, if the implied correlation index rises, it could spell the end of the dispersion trade, leading to a fall in the S&P 500. Second, continued sector weakness could see broader market declines. Not the cheeriest outlook.
So, what are the big takeaways here?
Mike warns us to look beyond the S&P 500's shiny surface. He emphasizes the importance of keeping an eye on sentiment indicators and the implied correlation index to stay ahead of potential downturns. Time to stay alert, folks.
Welcome to Eurodollar University's YouTube channel. Today we delve into an intriguing video titled Leaked Interest Rate Cuts Are Coming? Our guest today is Jeff Snyder, who offers incredible insights into the current economic climate. He's as dedicated to financial analysis as a kid is to their Halloween candy stash.
Absolutely, we're in for a treat. Jeff dives deep into the latest economic signals and their implications. It's like unwrapping a mystery box of economic indicators.
All right, so let's get into the crux of Jeff's analysis. What's the main takeaway?
The big idea here is that rising unemployment rates and weak labor market signals are pushing expectations for multiple interest rate cuts by the Fed. The strength of the U.S. economy is being called into question.
Sounds serious. So what does Jeff say about the labor market and unemployment?
He notes that rising unemployment is a global issue, not just in the U.S. Despite the headline unemployment rate being historically low at 4.1%, the increase from last year's 3.4% low is alarming.
Interesting. And what's the Fed's play in all this?
Jerome Powell, the Fed chair, is cautiously acknowledging the labor market's softening. There's buzz about the Fed preparing for 8 rate cuts starting in September. It's like they're planning for a financial winter.
Wow, that's a lot of cuts. What did Snyder mention about the S rule and market signals?
The S rule, which indicates a recession based on unemployment rates, is nearly triggered. Moreover, the inversion and subsequent uninversion of the 5-year and 10-year Treasury spread is another red flag. Essentially, it's like the economy is waving a big, flashing danger sign.
Jeff sure knows how to paint a picture. So what predictions did he make?
He predicts the Fed will start a series of 8 quarter-point rate cuts from September. Plus, if the S rule triggers, we'll know we're already deep into a recession.
All right, bringing it all together, what's the final word?
Jeff's message is clear. Expect a rough economic ride ahead. With interest rate cuts on the horizon and the labor market weakening, it's time to buckle up and possibly rethink those risky investments.
Welcome to the Technical Traders YouTube channel. Ready to get some wisdom on how expert investors build wealth by, you guessed it, not betting against the trend?
Absolutely. We've got a fascinating rundown today from an unspecified but highly insightful speaker who knows a thing or two about maneuvering through market ups and downs.
All right, let's dive right in. What's the core idea our speaker is sharing?
The main thesis is straightforward yet impactful. Expert investors don't push against market trends. They ride with the tide to keep their wealth growing consistently. Adaptability and reducing risk are key to their strategy.
Got it. Now, what are those juicy key points revealed in the video?
Firstly, market performance is all about recognizing cycles. We're back in a rising tide now, but the 60-40 portfolio ended 2022 with a painful 20% loss, while our speaker's strategy came out with a 5.8% gain.
That's a solid difference. What about the dreaded drawdowns?
Drawdowns can be brutal. The buy and hold strategy saw significant losses, and future corrections might double in severity. In contrast, they managed to keep drawdowns under 6%, aiming for slow and steady growth.
Low risk, consistent growth sounds like the way to go. What tactics are they using?
Their strategy includes shifting to US dollar index ETFs and cash when markets are unfavorable, using trend signals for buy and sell decisions, and avoiding risky moves like shorting strong stocks, for instance, Nvidia.
Time to polish that crystal ball. What predictions do we have?
First off, a major market correction is likely within the next 12 months, possibly worse than the last. Then they foresee a final big push-up before a trend reversal. Plus, bonds TLT might soon become a golden opportunity for traders.
Interesting. And how about gold and other precious metals?
Gold is set to rise, potentially hitting $2,650 to $2,715. Silver also looks promising with targets between $34 and $36 per ounce. It's a shiny forecast.
So, how does it all wrap up?
The takeaway is clear. Follow the trends, don't fight them. Their strategy leans on minimizing risks and seizing safe, calculated opportunities. There's also a heartwarming call to support charitable causes, blending financial success with social responsibility.
In today's video, Mike from Mott Capital Management warns of hidden weaknesses in the stock market, emphasizing the narrow participation driving S&P 500 gains.
Jeff Snyder from Eurodollar University expects a series of interest rate cuts due to rising unemployment rates and signals of a recession.
The technical traders stress the importance of following market trends to build wealth and minimize risks. Despite differing views on investment strategies, all experts highlight the urgency of understanding market dynamics to safeguard your financial future. Thanks for watching Financial Analysis in Review for July 10th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.